I see a bit of a discussion going on about inflation versus deflation. And I must say, I've been kind of flip flopping as I flip flop and go from one of my influences to another. My latest thoughts on it is definitely deflation. Obviously, that doesn't mean when the inflation kicks in, I was wrong or my influences were wrong. Steve Van Meter is one of those, but makes a very good point, and you can see my video, a very interesting scenario or something to that effect, which is only a few videos ago, where I talk about that particular case. But put simply, when there's a contraction in the economy, which is what we're experiencing right now, right? I mean, there's the whole situation about the unemployment, fewer people or nobody's really coming in from overseas, so the migration is almost dead. So how can we expect anyone to have the confidence to go and borrow the money? I've talked about this before, but they say, oh, but look, they're printing money. Reserve Bank of Australia is going to print money. Then you got Federal Reserve also, they are printing money. But one thing is printing money. See, central banks can print money and give it to the banks, but they can't lend that money to people. They can give that money to the big banks or the primary dealers, and then to big commercial banks, and then down to the retail banks. But those banks then still have to pass that printed money on to the population and lease it out type thing, because that's all it is. They're leasing you $1 million when you take a mortgage, and then you're paying it off. The principal plus the interest, and the leasing bit is that interest, really. That's what it is. So put it simply, is that there has to be demand. Now, there's no demand in the economy for anything, because there's actually, in Australia, for example, there's fewer people coming in. Not to mention the people who have lost a job or about to lose the job because the JobKeeper is ending, or have had hours reduced, and the contractors who have less work to do because there's less demand. I keep saying this. So this is deflationary. This is contraction. You will not borrow money from the bank even at 2%, which is pretty much almost what it is right now, if you think that the thing you are buying, whether you're buying or opening up a business or you're buying a house, isn't going to be worth what the asking price for it is now. Very easy example. It dawned on me today because one of my colleagues shared a link to a couple of houses he saw over the weekend, and they're still $1 million houses, and over 1 million at the Ponds and Stanhope Gardens, nice areas, but very, very far away on the fringe of Sydney. And they're $1 million houses on 540 square meter blocks. So you don't really get much, because these houses are fairly big, to be fair, 4, maybe 5 bedroom, but it is $1 million. So you can go to the bank, and one of the colleagues actually made a comment because we were talking about it. He said, it's a good time to maybe get a cheap loan, negative interest rates. So you go and get a loan for 0 interest, and then, or negative interest, but there'll never be loans for negative interest rates. There might be inter and central bank kind of negative interest rates, but they'll never be on a retail level. But let's say they're very close to 0, and you borrowed $1 million, and really your interest repayment is not that much at all, because you borrowed at 0.5%. Let's put it that way. It's as an example, because it's so close to the 0. And then your interest repayment is not that much, but you paid $1 million for a house that arguably is worth that. It was worth that because you paid it, because it's a free market type thing. You paid for it, but you did it thinking that you're not going to have to pay much interest, which is true. But what happens when the deflation kicks in even more, and then you have that house lose value and goes down to even just $900,000? You say, it's not a big loss. It is $100,000 that you still have to pay back to the bank. But take a scenario of a deep depression, which I'm pretty sure we're going to get into, unfortunately, in the next few years, definitely by 2022, right? In my opinion, because they're not going to let this situation go. This is their perfect opportunity to have their big plan. Let's put it that way. That's all I'm going to say. You're going to have to look up some of the other things as to why I'm saying all this. But so they're not going to let it go. So they're going to dump the economy even further. So it is likely that this house that you paid $1 million for is going to drop down to $600,000. And all of a sudden, your 0.5% interest rate that you got on your mortgage is not so attractive, because what's the point of you paying $1 million house with a very small interest rate, if any, when you owe more to the bank than what the house is worth, which is called negative equity. And I think a lot of people will find themselves there. So my advice as far as those houses is, and I heard from someone else, is that one of my colleagues' father works in the financial sector, and he said they're not lending money. So there's contraction of credit. What does that do to the value of assets that require you to have leverage and to borrow money? It goes down. So everything, every point, every argument I made here is deflationary. So there's going to be huge deflation. How long will it last before the inflation kicks in? I don't know, 6-12 months, but it's definitely going to be noticeable in the price. And this is why I think this is why a lot of people are buying stock, because they have some money in the bank. They think, oh, the inflation is going to eat the purchasing power of my money in the bank, so I'm going to buy the stock, which is why the stocks are roaring back up to all-time highs in the US, not even close in Australia. But in any case, they've recovered unbelievably. But that's all going to be wiped out. And that's going to be wiped out before the November elections in the US. It may start now at the end of August, or just at the beginning of September, have a pretty good pullback for a couple of months, and then maybe go back up once we know who the new US president is, so there's no uncertainty. Given that there is no, court action and assassinations, there's been talk about all of that and predictions, but given we know who it is in the Oval Office, everyone's happy enough, then the money starts piling back into the stock market after the pullback that we're going to have once again. Because this V-shaped recovery only happened in the market, but the economy is far from V-shaped recovered. So the fundamentals will eventually catch up to the market, and it's really inevitable. Was it a good trading opportunity? Yes, it was, but who actually had the guts to sink in any serious money into the market in March when it tanked 40%? I mean, when it looked so dire, when everything was closed, we were all locked down, not just Melbourne and Victoria, everybody was. It was looking awful. So of course, when there's blood on the street, that's where smart money came in. They would have made a lot on this pullback, or recovery. But the other problem is that if you were lucky enough to buy at the bottom and it started to recover 10-20%, you probably think, this is good enough. This is, in a month I made 20%, so I'm going to pull the money out, only to see the market rise another 20-30%. So and then you're kicking yourself in the backside. So that's the nature of investing. So you can never buy at the bottom and sell at the top. Nobody knows where it is, but I know there's going to be a pullback soon. And as far as the property market, asking price of some of those links that I got from those houses, the colleague sent me, are eye-watering at this stage and at this point in the game with the economy the way it is. Even if you have a job, actually nothing is certain. Really nothing certain, no matter who you work for. The money can dry up, and it will, especially these stimuluses that come from the government. They're not going to last forever, but the virus seems like it's going to linger around for a bit longer, and by a bit longer I mean years, or as long as they want to make it look like it's present and very serious danger. With that was a bit longer than I thought it would be, but the call is a definite deflation, a huge spike, deflationary spike before any if inflationary cycle comes back in, because again there's just not enough demand. When there's no demand, there's contraction, people don't spend. It's actually as simple as that. So printing money is just not going to do it. You can print money, but people have to take it, be willing to take it and pay off with whatever minimal small interest they have. Will they do it when they know that they might be able to buy that house or that stock or even that car for cheaper than they're able to do it now? Not to mention that rents. I mean, rents have been postponed in Victoria till the end of the year. So how about those investors that have tenants in there that can't even kick them out of their own property, private property? That's the rights that the private property owners have in a so-called capitalist country. So but that's another tangent and time for another video. For now, I'll end the video. Thanks for watching and stay in touch. Stay safe. Take care.